Today's three major highlights are all reflected in the market. Bitcoin has broken through $90,000. But where is the real bottom of this reversal? Trump and Biden have come up with a new move to make sure even Americans can't hide their crypto assets and have to pay taxes across the board. Meanwhile, MicroStrategy has spent $800 million buying up Bitcoin, but the market still isn't buying it. Tuesday, November 18th, this is the BTB Chinese channel. Where is Bian? I'm Michael. Let's look at the most important data headlines from the past 24 hours in crypto. As of noon, the market is basically at a point where we just can't hold on anymore. It's that kind of situation. Bitcoin was the first to plunge, dropping below $90,000 and setting the worst record in months. As soon as institutions saw the market turning bad, they kept pulling out. With the situation getting tense, retail investors had no choice but to tough it out. Ethereum also took a hit, dropping to $3,023. You can really tell, no one has the strength to push the market anymore. Among the top 10 cryptocurrencies, only the stablecoins are left, and they're holding the line simply because they don't fluctuate. The rest are all sliding downward. At this point, it's not just a problem with a single coin, it's the entire sector slamming on the brakes. Today, the Fear and Greed Index has plunged straight down to 12. So, the overall market sentiment is basically that people have lost confidence, and it's getting harder to keep the team together. The on-chain data is just as honest. Over the past few days, Bitcoin has been flowing into exchanges non-stop. On some days, the net inflow can easily reach 5,000 to 10,000 Bitcoins. This clearly signals that people are either getting ready to sell or are already in the process of selling. So with sentiment collapsing and coins flooding into exchanges, it's obvious we're seeing a classic combination of panic and sell-off. The pace of the decline is about to accelerate, so things are looking grim. But don't be entirely pessimistic. If one day we start seeing net outflows from exchanges, that could be the first glimmer of hope that the market is starting to stabilize. For now, in the short term, things do look a bit precarious. However, from a midterm perspective, opportunities are quietly building up because profits are made when prices fall. Let's take another look at the Coinbase Premium Index, which just dropped to negative $90. This is the worst it's been all year, instantly taking us back to February, when it hit negative 138. That was the era when institutions were pulling the plug and fleeing. So the biggest use of this indicator is to tell everyone whether it's the big institutional players driving the market right now, or if it's just retail investors stubbornly holding on. Coinbase is of course the home turf of institutions, while Binance is the stronghold of retail investors. That's why during bull market premiums, the numbers are positive. Everyone's charging ahead together, both retail and institutions, like they're on steroids. But once things turn bearish and the numbers keep dropping, this data shows that the institutions have already left the game. They've thrown the bag to the retail investors to carry, and the gap still needs to be filled. Most likely the institutions are all staying away. But if it flips back to positive, that's usually a signal that the market is about to change direction. In short, this current reading of negative 90 is basically shouting a warning to everyone. Be careful, institutions are no longer present, and a sudden spike could happen at any moment. Let's take another look. Bitcoin's composite index has dropped straight down to 0.72, returning to a low point last seen in April 2025. This basically means that on-chain momentum is starting to run out of steam, and short-term players are scrambling to cash out for safety. Market sentiment has shifted from euphoria to a let's stabilize first mindset. On top of that, liquidity is tight, ETFs keep seeing outflows, and the Fed's news is flipping every day. Bitcoin already dropped below $90,000 at its lowest. Currently, indicators are straightforward. When below 0.75, it heads toward support at $87,500. If it tests this level and returns to between 0.8 and 1, it will move sideways between $90,000 and $110,000. Only when it breaks above 1 can we say the bull market engine has truly restarted. So the target could be $150,000 to $175,000. At the current price, around $90,000, the market is as fragile as thin ice. But as long as the momentum reverses, that's when mid to long-term players can officially cash in their entry tickets. To sum up the current indicators in one sentence, it's very clear that Bitcoin is testing where the market's patience truly lies, and the next big move will depend on when it decides to recover. Alright, please like and turn on the notification bell. I'll help you sort through the latest updates from the crypto, blockchain, and mining circles over the past 24 hours. You're also welcome to join our membership. From Monday to Friday, we prepare a small wealth tip for our basic members, letting you know where to buy and where to sell, so you can experience the fun of trading. Now, let's look at today's headline news. In fact, the Trump administration hasn't released any positive news related to crypto assets for quite a while, right? Yet everyone is still speculating on prices and technology every day. But now, what we're facing is a major tax move. Trump is pushing for the US to cooperate with an international crypto asset reporting framework called CARF. What does this mean? On the surface, this regulation looks like a minor tax adjustment, but in reality, it's about bringing global regulatory heavyweights onto the blockchain. Just like how the IRS can monitor global assets, this would allow on-chain assets to be monitored just as clearly. Who should pay how much tax? The IRS wants to know exactly which American or even which person in the world owns which digital assets. So now, even the little breathing room and tax space that existed in the decentralized world is being squeezed bit by bit.
This proposal is based on the Crypto Asset Reporting Framework established by the OECD in 2022. So far, more than 40 countries have joined, including all G7 member states except the United States. The CRF requires countries to automatically exchange information about their citizens' digital assets held abroad, aiming to completely block any space for cross-border tax evasion.
I think that truly what's going to happen as the digital asset space starts to merge with traditional financial players is that you're going to see a revolution take place in terms of our financial lives in general as consumers.
The IRS is required to regularly obtain complete holdings and transaction records of U.S. citizens on overseas platforms. Any unreported overseas crypto gains will be considered tax evasion and will be subject to back taxes on capital gains and fines. This applies to centralized exchanges, self-custody wallets, stablecoins issued by issuers, and certain NFT platforms.
Now, this draft is already on the president's desk at the White House. As soon as Trump gives the nod, it will immediately enter the consultation phase, and it could be implemented as early as 2026. This also explains why the majority of privacy wallet users are from the US and the EU. What is a privacy wallet? It's a dedicated payment channel that allows you to make global payments without KYC, and you can convert funds into the fiat currencies of more than a dozen countries. It's free to use and very simple. Just scan the QR code on the screen to download and register for the privacy wallet directly. It can help you avoid a lot of tax-related hassles. Everyone should start using Web3 tools. Right now, the market is falling. So are the big players like MicroStrategy still daring to buy the dip? The latest announcement is out. From November 10th to 16th, MicroStrategy directly spent $835 million to scoop up 8,178 bitcoins, with an average purchase price of around $102,000. So now their holdings have increased to 649,870 bitcoins, with a total cost piling up to $48.37 billion and an average price of $74,433. This is a very classic example of buying at the absolute bottom during this correction. However, compared to their previous moves where they were buying just a few hundred coins at a time, like snacking, this time it was more like a full meal. But compared to before, when they would make a move with 10,000 bitcoins at a time, it's no longer as extravagant.
In fact, there were already signs of this large-scale accumulation as early as last week, when Bitcoin fell below $100,000 and there were unusual movements in the MicroStrategy wallet. At one point, the community mistakenly thought the company was going to sell its coins, but then founder Michael Saylor stepped forward to clarify, stating that MicroStrategy has never sold any Bitcoin and is continuing to increase its holdings, emphasizing that this round of buying would be quite substantial.
The 10 years from 2025 to 2035 will see a wide variety of business models, many different products created, numerous companies launched, and a lot of money made. There will also be many mistakes and many fortunes created. This is the chaos of the marketplace.
This time, they did jump in a bit early, but will we see a repeat of the massive buying spree from back then? Previously, when Bitcoin was at a high, they were only buying a few hundred each week, right? Clearly, they were controlling costs, but now the price has dropped so much, even falling below 90,000, and it still seems to be trending downward. Yet this time, they made a move with 835 million. It didn't support the price at all. So now, as the #1 Bitcoin stock, can MicroStrategy actually give the market some courage through its actions? The next few weeks will be the real key to watch. Yeah, there are legends of getting rich overnight. There are also carefully woven scams. This is a chaotic and lawless dark forest, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the end point of consensus is equality. BitcoinTV guiding you through the fog to see the future and slowly become wealthy together. Even more dangerous than tariffs? Europe is strictly guarding against US dollar stablecoins and 9 major banks. Joining forces to stabilize the market without speculating on coins, only spending, there is one undervalued token that might be the wealth code during the downturn. If you have any new answers, feel free to join the discussion. If the market isn't doing well, let's take another look at the situation with stablecoins. This year, you could say stablecoins have switched on turbo mode. The total market cap shot up to $310 billion, which is over half a province more than last year. So USDT is still the big brother, rising from $127 billion to $183 billion. USDC is even more impressive, jumping straight from $37 billion to $74 billion, a solid double. That's why even the US Treasury has said that at this rate, by 2028, the stablecoin market cap could reach $2 trillion. So when Europe looks at these numbers, they can't help but feel uneasy. This isn't just about stability anymore, it's about the financial discourse, which is likely to be dominated by dollar-backed stablecoins.
A group of 9 European banks, including ING and UniCredit, are forming a company to launch a euro-denominated stablecoin. It's the latest move signaling that mainstream finance is shifting to embrace digital assets.
Olaf Slypon, governor of the Central Bank of the Netherlands, has warned that the European Central Bank must regard dollar-pegged stablecoins as a potential source of macroeconomic risk, not merely a regulatory issue. In the face of the rapidly expanding market value of stablecoins, he pointed out that if volatility shocks occur, they could penetrate the financial system, affecting economic performance and the inflation trajectory, and might even force the ECB to make temporary adjustments to monetary policy. But would that mean raising or lowering interest rates? It all depends on whether stablecoins cause systemic shocks.
Actually, in Europe, Olaf isn't the only one keeping a close eye on stablecoins and feeling that the risks are high and something's off. There's also Piero, who holds a position at the European Central Bank. Back in April, he urgently stated that if euro stablecoins don't go online soon, the entire European market will be dominated by dollar stablecoins. When that happens, the main battleground in Europe will belong to the Americans. The Italian authorities have been even more outspoken, saying that stablecoins are actually more dangerous than tariffs and could potentially dismantle the entire European financial system. Moreover, the European economics community is also getting uneasy. Nobel Prize-winning economist Jean Tirole issued a warning in September, saying that if a major stablecoin collapses, he was probably referring to USDT, then governments around the world would have to spend billions of dollars to clean up the mess. So now stablecoins, which were once hyped as the future trend of payments, are being labeled as high risk in Europe. Every institution in Europe is now being forced to recalculate and reassess the risks. But what's even more crucial? This stablecoin storm could potentially rewrite the rules for global cryptocurrency payments and transactions in the future. Alright, now that we're in a downward channel, it seems like we've entered a bear market. Are there still any trending projects that can stand out? Arcade is pretty good. Arcade is like when you go to an arcade, you have to buy tokens before you can play, right? That's exactly how arcade works. It's a very simple model. Within its ecosystem, all spending and interactions rely on its token. It's like a fusion of airline miles and consumer reward points. And after being launched on the public blockchain, it can circulate across different projects and merchants.
The RK token isn't meant for speculation, it's focused on consumption, which helps it avoid regulatory scrutiny and makes it more suitable as a payment tool in digital scenarios. Issuers can use dynamic pricing incentives and promotional strategies to attract users, creating a stable consumption cycle and, in turn, encouraging partner merchants to join. The Fly token launched by Blackbird is a representative example, integrating the loyalty point systems of multiple restaurants so that users can redeem benefits across different stores. It also allows merchants to share customer traffic.
A blockchain-based loyalty platform designed for restaurants, facilitating on-chain payments. This Layer 3 solution is built on Ethereum and supported by Coinbase. It aims to simplify transactions by eliminating intermediaries, resulting in lower costs for both diners and restaurants.
An early example of arcade tokens is the Quarters token launched by the blockchain gaming platform Pocketful of Quarters, which allows players to purchase features and rewards within partner games. This aligns with the concept of arcade tokens as non-investment assets. In July 2019, Quarters received a no-action letter from the US SEC, clarifying that its purpose is for gameplay participation rather than speculation or investment.
So the pricing mechanism of arcade tokens actually has some substance. The faucet sets an upper limit, and the buyback pool helps stabilize the value, while the buyback mechanism provides a safety net for everyone. Because of this stabilization mechanism, it's almost impossible to get rich quickly by speculating on short-term price swings. Compared to those stablecoins that just quietly act as digital dollars, arcade tokens rely on brand loyalty, cross-brand collaborations, and the commercial creativity to launch joint promotions. So even in a downtrend, it doesn't mean there aren't good assets to look at. If there are other valuable coins you're following, feel free to share them in the comments. Let's explore together how to make money during a market downturn. All right, let's move quickly.
Hong Hao, twice named Person of the Year by Hongbo Business Weekly, and one of China's most influential economists, poured cold water on the market directly on Xiaohong Shu, saying, "Don't rush to fantasize about a rebound. Bitcoin has to drop to the 70,000s before it really hits support." As soon as he said this, the whole market quietly started calculating how much room there was left before reaching that 70,000 mark. El Salvador has made another big purchase. Just this morning at 8:20, they bought 1,090 bitcoins in one go, spending a whopping $100 million. Now the country's account holds 7,474.37 bitcoins, with a market value exceeding $686 million. They've basically turned national-level dollar cost averaging into a routine operation. Wei Shen, while in Argentina, bluntly criticized FTX during Disconnect, saying it's basically a textbook example of what goes against Ethereum's philosophy. FTX wanted everyone to blindly trust them not to do evil, while Ethereum's philosophy is, don't trust me, trust the code. It's not about not doing evil, it's about being unable to do evil. Their approaches are completely opposite. Former US President Trump has made another statement. Not only does inflation need to come down, it needs to be pushed all the way down to 1%. Simply put, prices must behave themselves, or else policies will have to get even tougher. The authorities just announced that the Solana Spot ETF with the ticker VSOL has officially launched. In simple terms, Solana can now not only be used on-chain, but Wall Street has also opened a formal gateway for it.
All right, for example, we always think that life is long, that there's still plenty of time, that we can travel later, chase our dreams later, be filial later, but in reality, later is the gentlest lie we tell ourselves. Days slip by as we stay busy, and plans fall apart as we keep putting them off. You think you're waiting for the best opportunity, but in reality, you're slowly losing your initiative. What is peaking opera? Remember this, the later you count on is being seized by others as their now to work hard. Happiness won't wait for you just because you move slowly. Dreams won't come true just because you wait for them. Time never gives you a warning, but the outcome will show you that the present is the only chance you truly have. While there's still time, go see the people you want to see. Do the things you want to do. Change "I'll do it later" to "I'll start now." Don't let your best today be wasted on a tomorrow that doesn't exist. If you understand, feel free to give us a like. That's all for today's program. Every day, we help you sort through all the news in Web3. Even in a downward trend, we still show you that there are plenty of opportunities to make money here. We hope you can join our Knowledge Edition membership channel to make it even more professional. All the membership benefits are included here. We hope you'll take a look. Let's get rich together, step by step. See you tomorrow.